The closing bell has just sounded on Wall Street, and we're wrapping up a session that was all about the Fed, the path into 2026, and a few very clear winners on the stock side. I'm Grant Mercer, and this is Storm Stock Solutions, here to bring some clarity to the chaos in today's markets. Let's start with the big picture narrative that's hanging over everything. The question of where stocks go from here, with or without more help from the Federal Reserve. According to analysis from MarketWatch's Mark Hulbert, history says U.S. equities have delivered positive returns in roughly 2 out of every 3 calendar years, regardless of election cycles or specific central bank moves. That perspective doesn't erase short-term volatility around rate decisions, but it does remind investors that the long-term engine of returns is corporate earnings and economic growth, rather than any single Fed meeting. At the index level, today's trade reflected that tug-of-war, positioning ahead of the Fed, but also an underlying belief that the economic backdrop into 2026 may stay constructive enough to support risk assets. Under the surface, we had some standout corporate stories that cut through the macro noise. On the upside, GE Vernova was a clear leader. Reporting from MarketWatch notes that the electrification and energy transition company surged to record highs after raising its long-term return outlook and laying out plans to return more cash to shareholders. That's the kind of 1-2 punch, better profitability targets plus a shareholder return framework that portfolio managers love to see in structurally growing areas like grid modernization, renewables, and power equipment. It reinforces the idea that parts of the industrial and infrastructure complex are quietly morphing into growth stories, not just old-line cyclicals. Tech and AI were another important thread. A MarketWatch piece highlights that Google's Gemini has been gaining ground fast, growing its user base at about 6 times the pace of ChatGPT, even though ChatGPT still leads in absolute users. For mega-cap tech, that's less about bragging rights and more about who can convert AI engagement into real sticky revenue streams, cloud usage, enterprise contracts, and higher-margin software offerings. Traders will be watching whether this perceived momentum for Google shifts sentiment within the AI trade, which has been dominated by a small cluster of obvious leaders. On the flip side, the risk radar today stayed squarely focused on rates and housing. MarketWatch reports that mortgage rates are jumping higher even as the Fed is expected to move toward, or at least discuss, further cuts in its benchmark rate. That disconnect underscores the reality that long-term borrowing costs respond to the broader bond market, inflation expectations, and term premiums, not just the Fed funds rate. For home builders, REITs, and lenders, that's an area to handle with care. Elevated mortgage costs can crimp transaction volumes, pressure affordability, and slow down housing-sensitive parts of the economy, even if the Fed is nominally in easing mode. Layered on top of that is a quieter but important debate about ultra-long mortgages. An op-ed flagged by MarketWatch argues that stretching to 50-year loans is a poor fix for America's housing crisis and could even undermine retirement security by keeping borrowers in debt deeper into old age. The bigger message for markets: structural housing issues are about supply, zoning, and construction capacity as much as they are about financing tricks. That matters for long-term demand in construction materials, regional banks, and local economies. Beyond rates and housing, there are a few under-the-radar themes worth parking on your watch list. One is the growing conversation around pharmaceutical supply chains. A MarketWatch commentary warns that America's heavy reliance on China and India for medicines poses a rising healthcare risk, arguing that reshoring or diversifying production may become a policy priority. If that gains political traction, it could have implications for generic drug makers, contract manufacturers, logistics providers, and even industrials tied to new domestic facilities. Another sleeper story is around consumer and subscription models. Chewy, the online pet retailer, is seeing its Chewy and AutoShip offerings drive a steady increase in what it calls pegged customers, essentially high-frequency, recurring buyers. As MarketWatch points out, that shift toward subscriptions and AutoShip can smooth revenue and make the business more resilient if the economy wobbles. It's a reminder that, across e-commerce and services, investors are rewarding models that trade one-off transactions for predictable, recurring cash flows. Even some of the more human interest pieces tie back into market themes. A story about former NFL quarterback Philip Rivers, Unretiring Mirrors, What's Happening with Many Americans Who Return to Work After an Initial Retirement. According to MarketWatch, those decisions are often about purpose and lifestyle as much as money. But for markets, a rising unretired workforce can influence labor supply, wage pressure, and consumer spending patterns, especially among older cohorts. That can ripple into sectors from leisure and travel to healthcare and financial planning. Stepping back to the macro wrap, the Fed remains front and center. Between commentary on the likelihood of stocks grinding higher into 2026 and the puzzling move in mortgage rates ahead of expected policy easing, the message from today is that the path of rates still matters, but it's not the only driver. Investors are juggling a mix of AI innovation, energy transition, healthcare resilience, and demographic shifts, all against the backdrop of a market that has historically rewarded staying invested more often than not, though always with bumps along the way. Looking ahead to tomorrow's session, watch how the market continues to digest the Fed's latest messaging. Do rate-sensitive sectors find their footing? Does the yield curve stabilize? And do leadership themes like electrification and AI continue to attract inflows? We'll be watching whether today's standouts, names like GE Vernova and the AI-heavy megacaps, can extend their momentum, or if we see rotation into more defensive or income-oriented strategies like the dividend approaches discussed by Mark Hulbert in MarketWatch's timely 10 concept. We'll break all of that down for you in tomorrow's pre-open segment as we reset for another round of trading and see whether this underlying optimism about 2026 keeps building. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.